Now it's time for Smart Charts with Abigail Doolittle, where we look at the timely topics with the street's top technicians. And Abigail, I understand you're taking a look at some long-term charts today.
You're absolutely right about that, Romaine. We are checking back in with John Gagliardi of Fidelity Investments, a regional brokerage consultant. Because, John, last time you visited us back in the volatile fourth quarter, you showed a very powerful chart of the S&P 500 that proved true. Let's take a look at that long-term monthly chart of the S&P 500 and what you think is happening now.
Yeah, so a lot of these moves, you have to look at that big picture. And if we went all the way back to the 1940s, there's this roaring bull market, and you fast forward to their children, and you get that breakout here in 1982, 82 through 2000, you get this massive move of 19 years, and it's driven by their children, the baby boomers. Now, their children, the millennials, kick off in 2013. We get this huge move up, and this could last for much longer than anyone expects because they're just going into family formation, just like their parents and the generation before them.
That's great perspective that we typically don't have on that program. And this chart's also holding that 50-month moving average, which suggests that the trend is in place. But let's now turn to real estate, which is a more defensive sector. And you have some interesting points to make about this ETF and the sector.
Yeah, so when we talked about my coming on, I went through every sector, and this is one sector that's doing something no other sector has done recently. It's breaking out. It's breaking out to all new highs. And you might remember, real estate investment trusts were not a sector until very recently in 2016. And you could see we have this nice move up, but then it gets stuck for 3 or 4 years. It's been 6 years. There's really no movement. So you haven't missed anything yet. And this is the beginning of what looks like could be a nice uptrend.
Is that possibly a cautionary signal on the markets overall, though, since this is a more defensive sector? And especially, let's bring in your GLD chart, because GLD would also be somewhat defensive.
Yes, not only is it defensive, but it might be a sign of inflation to come, which no one has thought about for decades. And if we look at gold, what I love about gold is it's done everything a chart can do in 10 years. We've got expansion, peak, recession, and the dreaded trough, which has been going on now for 6 years.
Yeah, Goldbug's not liking that.
No, but the interesting part is we're starting to curl sideways at the very end, and we keep challenging 1,300 on gold, and this we're using the ETF, and you can see we're not at 1,300 yet, but it's yet another challenge to that high.
And very quickly, what about that MACD on the bottom? Does that tell you that you want to get into GLD at this time?
Well, the good thing is this MACD is positive on the weekly, and I always tell people, when in doubt, zoom out. And if you zoomed out and you change this from weekly to monthly, that MACD is flat as a pancake right on the zero line for about 5 years. So something's about to happen. We just aren't sure what yet.